Right, the end of the year is often a busy and festive time, but can also come with a significant financial burden. Here to give us some tips on how to manage this and get ready for 2026, which is our year of investing, Brad Gordon is Senior Investment Advisor with Forsyth Barr. Thanks to our partners, Forsyth Barr. Brad, good morning.
Good morning, Ryan.
So what words of wisdom do you have for us before we go out and blow all our cash on Christmas presents this year?
Well, those amazing words of wisdom, and just have a plan and write down what you are expecting to spend and have a plan for how you're doing it. And rather than cramming it onto one paycheck, maybe do it over 2, 3 or even 4 paychecks several months out. I guess it's not rocket science. Interestingly, I had a catch up with a guy running a CEO of an emerging business recently. He said he spends most of his time cash flow planning. And I think as a household, as households, we don't do enough of that. And it's so important to get these little decisions right, especially as we emerge into what's potentially a good investment environment in 2026.
Yeah, and we're hoping, because it's been a pretty good one. I mean, business-wise, like for Kiwi businesses, it's been a tough year, but investment-wise, you know, international stock markets, etc., it's been pretty good, pretty resilient. So what are you expecting for 26, and what should we be doing to get ready for that?
Well, in 2025, if you've been on the right side of particularly the AI trade, which is probably now looking a little bit mature, I don't buy into the complete bubble theory. There are some bubbly patches in the market, but for most part, good sensible stocks are actually still looking okay. But I think the opportunity set for investing is in New Zealand next year. We've got interest rates back down to where they should be, where they're stimulating, and you're going to see signs of activity. You're going to see signs of activity coming back in the housing and construction market. Don't expect housing prices to run away, but you see activity, and activity is what's more important than probably house prices. And you're seeing improvement in consumer confidence, and we're seeing good tourism numbers and student numbers coming back to New Zealand, and all of those are positive. And the agriculture sector is still relatively strong.
If you look at the IMF forecast, we're actually going to grow faster than, if you believe it, faster than the Aussies next year, faster than I think even the Americans and the Brits, definitely the Brits. So there's a lot to be positive about. You know, when you talk about Kiwi businesses, maybe some of the firms are undervalued at the moment because they haven't been performing as well in the last year. Would I be sort of too late to jump in on them now? Like, are the smart investors already gone there, or is there still room, do you think, for the share prices to lift next year?
Well, I think the opportunity is probably more locally in New Zealand stocks. New Zealand stocks have been left behind largely in this rally over the last 2 or 3 years, or this big bounce that you've seen, particularly in the US. New Zealand stocks are still attractively valued. Some of the retirement sector stocks are trading at sort of 0.5, 0.6 times of their book value, their valuation of their underlying assets. So, that's a reasonably attractive investment environment as activity is picking up. You'd expect at least they'd go back to what the underlying assets are worth.
Brad, what's your strategy for Christmas presents? Do you take your own advice? Do you have a budget? Do you write a budget down and go out there and spend what you said you would?
I live on my spreadsheet, Ryan.
Good on you, Brad. Thank you. Brad Gordon, Senior Investment Advisor. Thanks to our partners, Forsyth Barr.